Good afternoon. This is going to be a financial analysis created by Dakota for Finance 381. We're going to run through three companies this afternoon. ExxonMobil Corporation, which is traded on the New York Stock Exchange, is XOM. The second, they were created in 1999 with over 83,000 employees. They're going to be the largest out of the three companies. Also, they reached $32.5 billion in revenue in 2014. That takes us to our second company, Cimarex Energy Company. They're traded on the New York Stock Exchange as XEC, and they were founded in 2002. Last year, they reached $2.4 billion in 2014, and they are also significantly smaller with only 1,000 employees. They're based out of Texas, Oklahoma, and New Mexico. That brings us to our third company of the afternoon, Northern Oil and Gas Company. They're traded as NOG, and they were created in 1997. And they were out of North Dakota and Montana, significantly smaller. They only reached 101 million last year. And with these three companies, that takes us to the three questions that I'm going to ask. What company would I lend a $1 million 6-month loan to? Second question, what company would I make a $1 million 5-year loan to? Third question, what company would I buy 50% ownership of? First question is, what company would I lend a $1 million 6-month loan to? And that was Cimarex Energy, based off of the short-term liquidity ratios of the quick ratio, the cash ratio, and the current ratio. The current ratio is going to be your assets divided by your liabilities. And as you can see, Cimarex beat all the competitors out by 1.2. That's because their property, plant, and equipment make up over 82% of their assets on their balance sheet. That takes us to our second short-term liquidity ratio, which is the quick ratio, which is the same as the current ratio, but instead of your assets over liabilities, it's assets, and you subtract out your inventory and then put over your liabilities. They had 1.5, which is significantly great, simply because you can see Exxon and Northern Oil both dropped over halfway when we subtract out their inventory. As you can see, the inventory of Cimarex is only 1% of their total assets, so it doesn't drop them down too much, which also says that they're efficiently selling what they're making. The last one, which describes how the company can pay back something immediately, which is the cash ratio, which is your cash over your total liabilities. And as you can see, they're way higher than the rest at 0.52. That means they're 5 times bigger than Exxon and Northern Oil and Gas. And that's why I picked them to be able to pay back the $1 million in 6 months, simply because they're more liquid than the bigger company and as Northern Oil and Gas. That takes us to our second question. What company would I make a $1 million 5-year loan to? And I picked ExxonMobil Corporations for a couple reasons. We're going to go through more of long-term debt and how they can pay that back, but also ExxonMobil Corporation is the largest company and they have been around the longest. That takes us to our first ratio, the times interest earned ratio, which is how many times they can pay off their debt. As you can see, it's significantly higher than Cimarex and Northern Oil and Gas, and this is explaining that they can pay off their debt 1,021 times of what they borrowed. Second ratio is the total debt ratio, which is how much of their assets is financed by debt. And as you can see, they're all almost equal. It's pretty much standard for the industry of oil and gas. All the way across the board, they're all going to be around 0.5. The last ratio is the equity multiplier, which is, it shows what percentage of the company is financed by debt versus by stockholders' equity. And as you can see, Exxon won that, or almost at 2, and Exxon's financed 50% by equity and 50% by their total debt. With managing their assets, they're doing a good job of balancing both out, and they could even raise up their financed by debt even higher if they're managing the assets that they're borrowing for. That's why I chose Exxon for the $1 million for the 5-year loan. What company would I buy 50% ownership of? That's going to be Cimarex Energy Company for a couple of reasons. As you can see, we're going to go through this one. We're going to go through a bunch of different ratios. The total asset turnover is going to be the first one. That's how efficiently the company is managing their assets. That's going to be this one down here, really low. Cimarex is the highest out of the 3. And that's going to be your sales over your assets. And that just shows that they manage their assets greater than Northern Oil and Exxon. The second ratio we're going to go through is the profit margin, and that's just showing how efficient they are with what percentage of the dollar that they get to keep as profit. That's going to be the second one right here. As you can see, Cimarex yet again is on top for that one. That's showing that they are making 22% of every dollar they get to keep as profit. That takes us to the third one, which is the price earnings ratio, which was a big factor in me picking this because it shows their growth rate. A lot of people would say that their stock might be overpriced because their PE ratio is so high. Their PE ratio is just simply the stock price over the earnings per share price. And as you can see, it's almost 4 times the other two companies. But to me, that shows that they have great growth and that people in the marketplace are looking at their stock as highly respectable and they're paying that price for it, so it's going to stay that high. The second to last is the ROE, the return on equity, which is profitability by revealing how much profit a company generates with the money the shareholders invest. And that's going to be your net income over your equity. And as you can see on this one, Cimarex is still the highest of all of them. They're going to be almost double what Northern Oil and Gas is, and then Exxon is really low simply because they're a bigger company and it's harder to manage their equity and borrowing at the same time. Your ROA is going to be the return on assets. That's how profitable a company is relative to its total assets. That's going to be your net income divided by assets. And as you can see, Cimarex is yet again on top with that one. Why Cimarex Energy Company? Just reassuring what I was stating before, the price earning ratio is 88.64. It has huge growth potential in the company, and like I said, the marketplace respects their stock and they're paying that price for it. The profit margin indicates that they have managed their production efficiently. It was really high. They have learned how to take their cost and lower it, so they're gaining the most on every dollar that they're receiving. The return on equity is 4 times the amount of Exxon. That's just showing that they're making more money on the investors are making more money for the company. The ROA fell just short of the industry average. This was the only negative thing that I saw. The ROA is how profitable a company is relative to its assets. Like I said, in the short-term liquidity, Cimarex actually had 82% of their assets tied up in property, plant, and equipment. And I think that if they were to manage their assets a little bit better and get more efficient on that, they could actually bring the profit margin even higher, and that would bring the ROA even better. And that's why I chose Cimarex Energy. Thank you.